Welcome to the Credit Suisse Monthly Economic Outlook. Speculation about contagion within the Eurozone continues to dictate markets as Greek aid talks drag on and investors anxiously await signs of progress on resolving the crisis. Just out of the Global Economics and Strategy Group meeting, and joining us today is our Head of Global Research for Private Banking and Asset Management, Giles Keating. Giles, we've seen some pretty erratic trading lately, mostly on the back of Eurozone debt concerns. Why have markets focused so much on Europe's problem in particular?
I think the depth of uncertainty is just so great. What might default or large-scale restructuring in Greece mean for the banks, for example? The very existence of the euro, that clearly, in some investors' mind, there's a question mark. These very, very deep political-based uncertainties really cause real worry for investors. That means investors hoard cash, and that's not just bad for markets, it can even threaten the real economy, threaten a recession again, because investors are holding on to cash rather than investing or spending.
Uncertainty about the future of the European Monetary Union remains high. What are Europe's options regarding fiscal improvement going forward, and what's the most likely scenario?
Well, we've thought in terms of two really extreme scenarios. One is a very good one where you move quite rapidly to a more or less full fiscal union. We think that's pretty unlikely and it needs a treaty change, very low probability. And then the opposite, which is also equally, we think, very low probability, but technically can't be ruled out, is some kind of euro breakup, which would really be pretty disastrous and very difficult to even know what it means. In between are the much more likely outcomes, which is what we're really focused on. And we call that muddling through. And that could involve really just a very long, drawn-out process, or, and this now seems perhaps slightly more likely, something that happens a bit quicker, perhaps some slightly more decisive resolution of what's going on in Greece, some kind of better clarity on forming the European Stability Fund with new powers, with larger size, with some form of leverage to make it large enough to really be effective.
Among all this uncertainty and a potential breakup, as you mentioned, where do opportunities lie for investors now?
Well, some prices have been driven down to levels which really do look pretty attractive. Some equity markets, and of course it depends which day you're investing on, but we have seen valuations fall to levels which, unless there really is a very deep recession, which is absolutely not our central scenario, those levels have been very attractive for investors to buy in, provided they can weather the current volatility. And the same applies to quite a number of the credits that are available, again, depending on which day you're investing.
The euro rose against the dollar in response to the European Central Bank's announcement of continued supportive measures, but it seems to be continuing on this roller coaster ride. What's happening in other currency markets?
Well, there's a lot going on. Obviously, the Swiss franc, it seems that the capping of the Swiss franc at 120 against the euro by the Swiss National Bank has been effective. If anything, we think it could give up a little bit more ground, go a little bit weaker, perhaps to the mid-120s. In the emerging markets, we're seeing some, again, roller coaster action, as you put it. We've moved from that period, even as recently as a couple of months ago, where they were too strong, to now many of them having weakened in the emerging market universe. And we've even seen some of the emerging central banks actually intervening to stop their currencies falling too quickly. Again, for the longer term, those currencies we think are on an uptrend. So that's another interesting opportunity.
Commodities have generally trended lower recently. What's the outlook?
Well, the industrial metals, of course, we think that correction was probably needed in order to reflect somewhat weaker growth prospects, although even there, for the medium term, we think the structural demand remains strong. So we could well be approaching an interesting entry level. Precious metals, we've seen gold, for example, and silver suffering some really violent gyrations, a lot of position closing, margin calls, some of these kind of effects. So the short-term movements can continue highly volatile, but certainly some of the levels we've seen, for example, gold fall to 1600 or thereabouts, or even slightly lower, those are probably interesting entry points for the longer term.
Thank you, Giles. That was Giles Keating, Head of Global Research for Private Banking and Asset Management at Credit Suisse. For more information on current market conditions or for investment ideas, visit the website creditsuisse.com/markets or check out the online magazine In Focus.